You make no friends in the pits and you take no prisoners. 1 minute you're up $500,000 in soybeans and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories, your freedom. The Peter Schiff Show.
Hello, everybody. Well, I think the big story continues to be the volatility in the precious metals market. You know, when I recorded my last Peter Schiff Show podcast, which was Wednesday of last week, when I recorded it, gold closed above 4,200, which was a record high, and silver closed, I think, just above 53. That was on Wednesday last week. Now, following that podcast, gold and silver went on to make new highs both on Thursday and on Friday. And I think by early Friday morning, gold had topped out at about 4,375. So it added about another $175 to where it closed on that Wednesday. And silver actually got above 54. It almost hit 54.5. It got to like 54.40. Then there was a sharp intraday reversal that started early on Friday morning that saw gold drop about $180 from its peak. Silver dropped about $2.50, and gold ended the week at about 52.50, and silver at about 51.75. So silver was a little lower than it was when I did the Wednesday podcast. Gold still managed to close higher, but the volatility increased dramatically this week, starting on Monday, when there was a big rally in gold, about $130. I think it closed up better than 100, but I think on the high, gold was up about $130 on Monday, and it actually took out the Friday high. Gold got to, I think, 4,378 and change. Silver didn't quite make it back to its Thursday high. It had a rally, but it didn't, make a new high. And then on Tuesday, we got the big dump. Gold dropped over $300, 6.5% or so one day. Silver tanked by more than $3. And then on Wednesday, we got some follow-through selling, and gold went all the way down to 4,000 and about 16, something like that. Never made it back below 4,000. Got close, and then it bounced back. And gold closed this week, I think, about 4,110. And silver closed the week just above $48.50. Now, yes, we've had a pullback in both gold and silver. They're now in correction territory. Corrections are very normal in a bull market. Gold is now off about 6.4% from its record high, and silver is off about 11% from its record high. But number one, I think the most significant aspect of the gold correction is that we didn't correct from 4,000. We corrected to 4,000, meaning that the correction started well above 4,000. It's not like we ran into resistance at 4,000, which is what a lot of people would expect at a big round number like that. I mean, typically, psychologically, you get resistance. We had it at $2,000 gold. We had it at $3,000 gold, though not quite as much as we had at 2,000. But a lot of people would have expected that 4,000 to be some type of resistance that, could cause a pullback, and it may take a little while for the market to muscle through 4,000. Instead, we went through it like a hot knife through butter. Yes, we had a correction, but we fell down to 4,000. 4,000 now looks like the floor for the price of silver. Now, instead of being emboldened by that, because if 4,000 is the new floor for gold, that is great news for the gold mining companies. But you wouldn't know that by looking at what happened to those stocks. The GDX is now down 14.5% from its high last week, and the GDXJ is down 15.5%. And pretty much every silver stock is in a bear market, right? Down more than 20%, even though silver is at 48.5, which is a very high price for silver. And the fact that it was able to get through 50 all the way up almost to 55, I think should be encouraging news for silver stock buyers, because it shows that 50 isn't the ceiling anymore. We went through 50. And yes, we're back below it now, but I doubt we'll stay below it for long. Now, getting back, though, to gold and 4,000, I think 4,000 is the new 3,000. And if you recall, when we got above $3,000 gold, we did dip below it a couple of times, but we didn't stay below it very long. It really was the floor. The same thing is probably going to happen with 4,000. Now, I wouldn't be surprised if the market went back below 4,000, especially since it came so close this week at 4,016. Now, maybe that was the low. Maybe this is the end of the correction. But it's also very possible that that's not the low, that the market retests that number and maybe goes a little lower than that in order to shake out some of the speculators who may be, buying it now and putting some stops below that low, or maybe below 4,000, hoping that it won't go down there, and trying to get, kind of a low risk trade where I'm buying gold at 4,100, or maybe they got in a little lower and I'll get out if it gets below 4,000 or something like that. So there could be some people trying to do that, and, they may get stopped out. Then again, they may not. I don't know, but I don't even care, because I think that if we do go back below 4,000, it's only going to be very briefly, and mainly probably just to flush out those stops. And then the market will come back up. So I think we're headed a lot higher. I think the fact that gold went above 4,000 is a very bullish sign. But what's also very bullish to me is how the media, the financial media in particular, is covering gold's rally, and more important, its decline, because they're treating it like this is the end of some kind of speculative mania. In fact, I was watching on CNBC today, and they reported some news that came out from the inflows to GLD. And there were very substantial inflows finally into GLD over the last, 4 months. And that contrasts sharply with the earlier part of the year and all of last year, where we had massive outflows out of GLD. Now, the way they covered it was, this probably shows you that it's the top of a mania because the investors were chasing gold at the highs, as if we've seen the highs. We haven't seen the highs, but according to CNBC, maybe we have, because the investors got suckered into the market and bought the highs. Now, that's very different than the way they covered news last year, when we had huge inflows into Bitcoin ETFs. They didn't hold that out as evidence of the end of a mania, of the individual investor being dumb enough to buy the highs of Bitcoin. The way they covered that was as a positive. They said, well, this just shows that interest in Bitcoin is spreading, right? Now you have more investor interest in Bitcoin, and so it's a good thing. And so money going into Bitcoin ETFs was a positive for Bitcoin, but somehow it's a negative for gold. Now, I think that, yes, it could be a very short-term negative in that we got a correction, right? A bunch of people rushed in, and now we get a correction. And that's probably the last couple of weeks, not the last 4 months, because it wasn't until very recently that gold started rising at an accelerated pace. But I do think that the fact that we finally have some inflows into gold ETFs, and that they are significant, to me, does indicate that investors are finally getting interested in gold. Now, they're not interested enough, and there's not enough of them who have gotten interested. But now, after having no interest whatsoever, they're finally starting to recognize that they should buy gold. And I think that that is a good sign, because I don't think that the money that came into ETFs in the last few months is done. That now that gold has pulled back from 43 and change back to 4,100, that whatever interest was prompted is now gone. No, I think that's the tip of the iceberg. We have a lot of money that's going to be following up. Now, yes, there may have been some short-term leverage speculators that got burned because, they came in late and, they got surprised by a big correction. That's possible. But all of this is normal in a bull market. And as I've been pointing out, the biggest moves in any bull market, and this is not just for gold, but in general, when you're in a bull market, the biggest moves are down. Just like in a bear market, the biggest moves are up. And that's because the market is trying to fool people into thinking that either the bull market is over or the bear market is over. And in the case of gold, it's a bull market, and these sharp corrections are designed to scare out the weaker players, people who may have just come into the market more recently, and just kind of get rid of them, get rid of the, the dead weight, the excess baggage before we move up to new highs. But the media acts like, oh, this is the top, right? Get out. If this was the top, nobody would know. I mean, that's how tops are generally made, or bottoms. Like, you don't really realize that you're at the top until you're a long way down, right? The market, they don't ring a bell at the top or the bottom. And so you don't get this big drop that says, aha, the gold bull market is over. No, these big drops like that are a sign that the bull market is alive and well. It just has this this correction. And of course, the market was getting overbought. Of course, not overowned. Overbought is a technical term because very few investors own gold. Gold ownership among institutional investors and retail investors is historically low. That's why a lot more money is going to come in. But again, what's also very significant is that the central bank buying is not even close to ending. They are ongoing buyers. They are buying for a reason. They need to increase their gold reserves. They need to decrease their U.S. dollar reserves. And so this is going to happen regardless of the price of gold, right? They are buying, and they're not buying their gold to turn around and sell it. They're buying their gold to hold it in reserve to provide backing for their own currency, backing that they can no longer really have with the U.S. dollar or U.S. treasuries, given the likely decline in the value of the dollar and treasuries. And so they are divesting. And so this is going to continue, but the investor interest, I think, is going to continue to pick up in gold and silver. So I don't think the highs that were established last week and earlier this week, those are not the highs. Those are just a temporary high. I would be surprised if we didn't take those highs out before the end of the year. We could easily move quite a bit higher than those highs. We're not getting a lot of economic news because of the government shutdown. We do get an FOMC meeting next week that could be a catalyst for another move up in the price of gold. The Fed is expected to cut rates yet again. And that is despite the news that we got today. We finally got some government economic data. I guess they forced them to do this even though we're in a shutdown. They released earlier this morning the CPI numbers for September. And consumer prices rose 0.3 on the month, which was a bit below the consensus of 0.4. But the more significant number is that year over year, CPI is up 3%. Now, that's 0.1% hotter than the prior month, slightly below the 3.1% that analysts had expected. But what's more significant is the sequential number going up. So we were at 2.9. We didn't go down from 2.9. We went up to 3. Now, remember, the Fed claims that its target is 2. So if your target is 2, and in the last month, you moved up from 2.9 to 3, so you're 50% above target and you're headed in the wrong direction, what would you expect the Fed's next move to be? Well, it should be a hike, right? If inflation is 50% above target and rising, and the stock market is at a record high. By the way, all 3 of the major stock market indexes, the S&P, the Dow, and the NASDAQ, hit new record highs today. In fact, the Dow today closed for the first time ever above 47,000, excuse me. Again, this is a nominal high, not adjusted for inflation or the price of gold. But you've got record high stock prices. You've got $4,100 gold. You've got inflation 50% above target and rising. Right? The Fed should hike. Yet the Fed is about to cut. Right? And that's one of the reasons, right, that the markets are where they are, including gold, that the Fed is going to do the wrong thing. So we'll see how the market reacts to this next week. And by the way, even the core, right, if you strip out food and energy, year over year core was still up 3%. Now, that was a little bit better than the 3.1, but even the core is 50% above target. Because a lot of times they try to say, well, we don't have to worry about the headline because it's got all that volatile food and energy. Let's just focus on the core. Well, one of the reasons that headline isn't much higher is that oil prices are a lot lower. In fact, earlier this week, oil got down below $57 a barrel. Now, it's back up at around 62 now. It bounced in part because of Trump coming out with new sanctions on Russia. But I've been saying that oil is much too cheap and is due for a big rally. I think that rally is coming. But in the meantime, low oil prices are helping the CPI. Yet despite that, despite the low oil prices, headline CPI is still 3%. It's going to be a lot hotter than that when oil starts to rise. But if you don't count oil and you don't count food, right, we're still at 3%. So there's no way that the Fed could spin this to claim that inflation is low, that it's anywhere near 2%, and that they should be cutting rates or they should be hiking rates. And, of course, also what happened between now and the last podcast is the national debt for the first time went above $38 trillion. You know, even though the government is shut down, and by the way, the shutdown is now in its 24th day of the government shutdown. But even though the government is shut down, the debt keeps rolling up, right? Because the government is still spending a bunch of money, even though it's shut down. I mean, they only shut down a tiny portion of the government. That's the problem. They don't shut down enough, right? If they shut down the whole thing, and if they shut down the taxes, right? People still have to pay taxes when the government is shut down, right? That doesn't stop, right? The tax collection doesn't stop. It's just some of the spending stops. But despite that shutdown, the national debt is now above $38 trillion. And with exploding debt, with record high stock prices, record high gold prices, and a CPI that is 50% above target, especially given the fact that the CPI understates the increase in prices by design. So if prices are rising officially by 3%, unofficially they're rising by at least 6%. Yet the Fed is about to cut rates, throwing gasoline on the inflation fire that, of course, it lit. Anyway, I got a quick commercial break, so stick around. We're coming right back. Building a legacy takes risk, sacrifice, and a lot of long days. But protecting that legacy shouldn't be a gamble. Here's something surprising. 72% of Americans overestimate the cost of life insurance. That misunderstanding leaves too many people unprotected. Now, I talk a lot about protecting your wealth, but protecting your family starts with making sure they're covered if something happens to you. That's where Policy Genius comes in. Policy Genius isn't an insurance company. It's a marketplace, one that makes it simple to compare policies from America's top insurers and find coverage that fits your needs and your budget. They lay out all your options clearly, the coverage amounts, prices, terms. There's no guesswork, just clarity. You can even talk to licensed agents who walk you through the process and handle the paperwork for you. See if Policy Genius can help you find 20-year life insurance policies starting at just $276 a year for $1 million in coverage. Life insurance is a form of financial planning, and Policy Genius is the country's top online marketplace for getting it done. They've earned thousands of 5-star reviews on Google and Trustpilot from people who found the right policy at the right price. Business is about risk, but your family's future doesn't have to be one of them. Go to policygenius.com/gold to compare life insurance policies, understand your options, and make a move that supports your long game. That's policygenius.com/gold. All right. Now, also, more evidence that gold is not in a bubble and that investors remain skeptical and pessimistic and fearful, right? In a bubble, investors throw caution to the wind, and it's greed that rules the trade. But in the gold trade, it's still dominated by fear. And a good example is the reaction to Newmont's earnings, which were released, I think, last night. So after yesterday's close, but first time U.S. investors could trade Newmont stock in the U.S. because it also trades in Australia, and so it was down last night in Australia. But in the U.S., the first trading was this morning, and Newmont opened down about 7%, despite the fact that it announced record earnings and record revenue. In fact, earnings doubled, more than doubled from a year ago. So again, the price of gold isn't double, but their earnings doubled. And they beat estimates too. But instead of focusing on the good news, investors focused on what they perceived to be the bad news. Right now, in a normal bull market, that's longer going, where you have more optimism. Investors focus on the good news and ignore the bad news. But earlier in the bull market, when there's more skepticism, the bad news seems to get all the coverage. So what was the bad news in the Newmont earnings? Well, Newmont warned that in the current quarter, Q4, their cash flow will be impacted by some severance payments that they're making and some other costs related to construction of some, mining operations, a water facility. I forget the exact expenditures. But those expenditures, unlike the severance were just one time. A Q4 event, the severance payments will be made, and then that'll be it. But the other expenses could be recurring for several quarters, I forget, maybe a year or two, until this thing is completed, in which case then, they get additional production. So they focused, I think, investors on the fact that, wait a minute, there's going to be some negatives in Q4, and so let's sell the stock. But they ignore the fact that gold prices are already much higher, even with the pullback now, than the price they realized in Q3. And probably the extra income they're going to earn from higher gold prices is going to more than offset these costs. So earnings are going to go up. They're not going to go down. And the stock is already cheap. I think now, it's at 12 times earnings based on the earnings they just reported. That's almost a 50% discount to the S&P 500. Yet Newmont is growing its earnings much faster than any of the stocks in the S&P 500. Now, also, partially, the earnings would have been even better in Q3, but their production was down over what was forecast. So they produced a little less gold, but of course, they got a lot more money for the gold that they produced. Now, this is classic, that investors react to production delays as bad news. It's not bad news, right? yes, it impacts the current quarter, but that's just more income for future quarters, because any gold that they didn't mine for whatever reason, whatever delay impacted their production, that gold is still there, right? It's not like rotting. It's not decaying. It's not like, oh, we didn't dig it out of the ground this quarter, so we've lost it. The gold is still there. Now, yes, they don't get to sell the gold this quarter. Maybe they'll sell it next quarter or the quarter after that. So yes, the time value of money, the interest rates. So maybe investors will have to wait a little longer to sell that gold. But since the price of that gold is likely to be quite a bit higher, it's actually a good thing. The longer they wait to mine the gold, the more they're going to get when they sell it. In fact, a lot of companies, it would be great if they could just shut down production entirely, but they can't do that because they have, staff, they have overhead, they have, requirements and permit licenses. So they kind of have to mine. But in many cases, if they just turned everything off and said, we're just going to mine our gold in 5 years, given how much higher the price is going to be, that could actually be good news. But investors just can't stop focusing on the quarter, the current quarter. What is the number? And they don't look at the big picture and think about, well, the value is still there, right? The gold is still there. So who cares? But again, they're focusing on the negatives. And this has been the case the entire rally. If you look at all these gold stocks that have gone up double or triple over the past couple of years, it's been the same story the whole way up. Every time a gold company or a silver company has reported earnings over the last couple of years, and almost all of those earnings beat estimates, the stocks went down every time. Right? Now, of course, they recovered a couple of days later and made new highs, but the initial reaction to better than expected earnings has always been to sell the news. Now, to me, that is more indicative of a bull market climbing a wall of worry than it is any kind of mania, which is the way the media has been portraying it. Just a speculative frenzy. Gold's like the new meme stock. Everybody was chasing it. Everybody is not chasing it. Hardly anybody is in this race. Yes, a few more people got attracted to the market in the last week or two, and many of them may have been flushed out. Who knows? But this is just a bump in a long, long road, and we got a long way to go before the sentiment gets anywhere near bubblicious or something like that. In fact, I think the segment that is most excited to proclaim the death of the gold bull market is crypto, because the Bitcoin guys are hoping that problems for gold are opportunities for Bitcoin. That now that gold is topped out, that the trade is going to rotate into Bitcoin. That ain't going to happen, right? Most of the people who have been buying gold couldn't care less about Bitcoin. That's why they're buying gold. And they're not going to rotate into fool's gold because real gold took a pause. So that's just a bunch of wishful thinking. They're trying to hype people into Bitcoin. They're not trying to get the gold buyers. They're just trying to get people that aren't doing anything to buy Bitcoin because they want them to think that now Bitcoin's about to moon because gold is coming back to earth. Even though it's not really coming back to earth, it's still north of $4,000. And, they point to prior periods where gold moved first and then Bitcoin moved. But I don't think those two events are in any way correlated. I mean, Bitcoin has just been moving up with risk assets. It's got nothing to do with gold. But sure, you can always point to periods where gold stops going up. Gold is risk on, right? So gold's safe haven. So the reason that Bitcoin tends to move up when gold is going sideways or moving down, it's not because people are rotating out of gold into Bitcoin. It's because people are buying risk assets rather than a safe haven, and Bitcoin falls into that camp. But what's interesting is that while the NASDAQ is at a new record high today, Bitcoin is well off its high. Bitcoin closed around 110, 111,000. Bitcoin's high was 126,000. So Bitcoin isn't getting a bid as a risk asset, and it's not getting a bid as a safe haven. It's kind of stalled out. And rather than a rotation into Bitcoin, I think we're more likely to see the rotation out of Bitcoin. The Bitcoin community is trying their best, to hype this up and get their congressional allies and Trump. I noticed they came out today with the list of the big donors to the ballroom that Trump is building at the White House. The price tag now is $300 million for a ballroom, right? Not as much as it's costing to redo the Fed building, but still $300 million. It's one room, right? $300 million. But some of the biggest donors are the crypto industry. Why are they doing that? They are cozying up to Trump because they need Trump. They need the support of the government because the crypto industry fails without the government propping it up because it can't survive in the free market. It needs government intervention. It needs the government to misdirect resources into crypto. And so that's why they're giving the government so much money because they expect something in return. And what they need in return is government support for an industry that would be failing absent that support. And by the way, a lot of people think, hey, this is not a big deal that we're spending $300 million on a ballroom because, the taxpayers aren't paying for it, right? And so we shouldn't worry about the cost. Who knows what the cost is? Because if guys in the crypto industry are bribing Donald Trump by donating to his ballroom, right, that he's building, what are they getting in return, right? What is the quid pro quo? What does that cost the taxpayer, right, the American public? We don't know what's going on behind the scenes in exchange for these big donations to this ballroom. But even if it was all on the up and up, let's assume that all of these companies, tech companies, crypto companies, just believe that we should have this big opulent ballroom so we can have lavish parties at the White House, right? Let's say they believe that. Is that the best use of $300 million? Because there's a cost to everything. So if that money is being donated by these companies to the White House for a ballroom, they could have done something else with that money. They could have invested it productively in their businesses. They could have expanded operations, bought more plant and equipment, hired workers. They could have funded charitable endeavors. I mean, I'm sure there's more worthy causes in America than a big ballroom so that Trump can have parties at the White House and invite a lot of friends to these big parties. Look, the last thing we need at the White House is a gigantic ballroom. I think probably, Donald Trump, when he goes, he was just recently at a Windsor Palace in England, and he probably was envious of this gigantic castle, right, that King Charles has. And they're a big ballroom. But that was built by a king, right? That's why Britain has, these huge palaces, because kings, right, built them, right? We're not a kingdom in America, right? We're a republic, and we don't need a lavish ballroom at the White House. I mean, I think the look is all wrong, especially, now where we have $1 trillion debt, the government is shut down. We're erecting this gigantic, going to be, probably, gilded in gold, big fancy ballroom to turn the White House into more of a palace. It's supposed to not be that opulent. I mean, it's called the White House, right? It's not even the White Castle, right? So it was, yes, it's larger than most homes, but it's not supposed to be like a palace for a king, right? It's supposed to be the home of the president, who is just a normal person. There's no royalty in America. That's in the Constitution, makes that clear. No titles of nobility. So presidents are ordinary people. They're not kings, right? They're just like one of us. And so they don't move into a palace. They live in the White House, right? And then they go back to reality. So I don't like this whole thing. I think it's more about Trump's ego so that he can build this big ballroom. And of course, even after he leaves, it's always going to be probably, the Trump Ballroom, right? It'll have his legacy. I'm sure he's going to have his name on there somewhere or something like that to make a lasting impression. But look, we're in a lot of trouble as a nation. And one of the reasons we're in a lot of trouble is because we've spent money recklessly. We've wasted a lot of money. And so symbolically, even though, $300 million is a drop in the bucket when you got a $38 trillion national debt, but still the symbolism of it is, spending that money at a time where we should be cutting back on expenditures is wrong. And you can even ask the donors, hey, instead of donating the money to build a palace, a palatial ballroom that we don't need, how about just donate it to paying down the national debt? I mean, at a minimum, they could do that. Just write a check to the U.S. government to pay down $300 million worth of debt, because I'd rather do that than build a ballroom. By the way, too, this government shutdown, the record for the longest government shutdown was also set during the Trump administration. It was his first term. It was 2018, 2019. And it was a 35-day shutdown. And if you remember, the battle there was over funding for the wall. And Trump wanted wall funding in the budget, and the Democrats didn't go for it. And at that time, the Republicans didn't control both houses. They had one. And so they actually needed the other house. But after 35 days, it was Trump that basically backed down and accepted the continuing resolution or whatever it was without the wall funding. I think he later tried to get some extra funding using executive order, but he initially wanted it in that budget. And that's what was the real sticking point that led to the 35-day shutdown. So I think that this shutdown is going to break that record. And I think that Donald Trump, has a bad taste in his mouth from losing, technically, and, he doesn't like to lose, the last battle by caving. And I think that one of the reasons that he did is I think the public opinion polls started to move against him. And so there was probably a lot of pressure to cave. I'm not really sure, where the polls are now, but I don't think Trump wants to be the loser again. I think he'd like to see the Democrats back down. And so this shutdown could be a lot longer than the last one. And we'll see if it eventually starts to affect the markets, because obviously right now it's not. It's not affecting the stock market, which is hitting record highs. And that's something that Trump looks at quite a bit. And so as long as the stock market is going up, then the shutdown may continue. Something else that just got shut down was trade negotiations with Canada. Apparently, Donald Trump got very upset that the Canadians, I think it is the province of Ontario, and you may have seen these ads. They're now running ads on television that feature Ronald Reagan. And it was I guess, a radio address that he gave, but, they're marrying it with images where Reagan was talking about the benefits of free trade and the harm of protectionism and tariffs. And of course, that's what he believed. That's what anybody who would be a conservative, a free market guy, a modern day Republican, if you look at Ronald Reagan, right, as that's what a Republican is. A Republican, it's not the Rockefeller Republicans that preceded Reagan, right? Like the Richard Nixons or the Gerald Fords, right? These were more bigger government. Ronald Reagan represented a departure from that. Somebody who was really talking about smaller government, shrinking government, less regulation, less government spending, fiscal responsibility, that kind of stuff. He was kind of like a Goldwater. And, when Goldwater first got the nomination for the 1964, see, nobody thought Goldwater would win because, he was not the type of Republican who had been winning, right? Like Nixon. He represented a different wing of the Republican Party. And so then he won, and then he got killed in the election with Lyndon Johnson. But Reagan was a big supporter of Barry Goldwater. And then when Reagan came back in 1980, and he challenged Jimmy Carter initially. I mean, not Jimmy Carter. He challenged Gerald Ford in 76 in the primary and lost that primary, but he did well. And then he ran against Carter in 1980, and he did what Barry Goldwater failed to do. He won, and he won in a landslide. And so ever since then, that's kind of been, the Reagan party, right? So if you look at that, right, if you're going to be true to Ronald Reagan, and everybody wants to pay homage to Ronald Reagan because he's still very popular today among the Republicans, right? Donald Trump likes to claim he's like Ronald Reagan. Well, he's nothing like Ronald Reagan. And one of the ways he's nothing like Ronald Reagan is when it comes to trade. Ronald Reagan would not support anything that the president is doing, despite the fact that he's trying to spin it the other way, or they got the Reagan Library is coming out now. I guess they put some pressure to say, oh, this is a fake ad. It's not fake. I mean, yes, they didn't use the entire speech because they had to cut it down because they have to, there's a 60 seconds or however long the ad is. But what the sympathy that they are showing is 100% accurate. Ronald Reagan was a staunch supporter of free trade. And he knew that protectionism didn't work, that it would backfire, that it would harm the very workers that it claims to help, and that it would harm all consumers, including the workers who are themselves consumers, right? Every worker is a consumer, but they're all made worse by protectionism. And, of course, Donald Trump is very upset that these ads are running, and so now he doesn't want to talk to the Canadians because they've been running these ads. He's trying to claim that Ronald Reagan would support his agenda, and there's nothing that he's doing right now that Ronald Reagan would support. In fact, I read an article in the Wall Street Journal, and now the Trump administration is denying it, but, it's probably true. But that they were thinking about investing something like $10 million a pop in a handful of quantum computing companies. The government was going to take this money and invest it in these private companies, which, again, is totally unconstitutional. There's nothing in the U.S. Constitution that authorizes the U.S. government to make investments in private companies on behalf of the U.S. government. That's not what the government's there to do. The government's not supposed to invest our money. We're supposed to invest our own money, right? I mean, there's a huge difference between a private individual investing their own money, and the government investing taxpayer money. First of all, when a private individual invests money, they don't want to lose it. It's their money. And therefore, they're going to be guided by, a profit and loss, motive. And that's a good thing, because if an investment is profitable, meaning that it can generate returns that exceed its costs, it is a good use of scarce resources, and it is a net positive for society, because the business that you are investing in is able to utilize those resources in a way that more value is created than the resources that are consumed. Because any resources that are used in one business venture are resources that can't be used in another. And so they need to be allocated to their highest and best use. And the only way to do that is by profit and loss, right? You know that you're doing good if you make a profit. You're doing bad if you generate a loss. And sometimes you need to generate losses in the short run to make profits in the long run, but that is a judgment call, and it needs to be made in the private sector by people who have skin in the game. But when you let the government invest taxpayer money, what the hell does Donald Trump care if the taxpayers lose $10 million in an investment? It's not his money, right? So he's not going to scrutinize the legitimacy of the investment the same way he would as a private citizen investing his own money. So it's much more likely that the government will get it wrong. So that's why the government shouldn't do it, right? If an investment is worth funding, it will attract funding in the private sector because people will want to invest in the company. If a business can't get private capital, it's probably because it's a bad idea, right? If an entrepreneur can't find anybody willing to fund his idea, it's probably because the idea is no good. If he has to go to government to get the funding, and he gets the funding for an idea that the private sector had no interest in funding, it's a pretty good sign that it's a waste of money, right? But again, doesn't care because it's not their money. And you also don't know the real motivation because stuff can be happening behind the scenes. There could be, blackmail, and not just outright blackmail, but donations to your presidential library or your ballroom at the White House. So you don't know what's going on. What did this private company promise in order to secure this government investment? So it shouldn't happen. None of this should happen. But also, of course, you have the added problem of once governments have an ownership in a business, aren't they going to try to tilt the playing field in favor of that business? Might they also try to impede that business's competitor? After all, here's a company that has government backing. Don't you want to invest in that company with the government behind it versus these other companies that don't have the government behind it? In fact, now they're adversary. In fact, the minute that Donald Trump or that these stories came out that Trump was considering this, a bunch of money now went into these stocks because now the president, using the power of taxpayer money, is influencing decisions that other investors are making. So just by endorsing certain companies, right, you're manipulating or misdirecting capital because now people want to invest where the government is favoring them. And any money that gets redirected to the businesses that the government want to promote comes out of other businesses that they're not promoting. But the thing is, those other businesses might have won that capital in the free market. So if the government steps in and decides to pick certain companies that it wants to sponsor, invest in, and promote, and as a result, capital now flows into those businesses and away from the businesses that the free market would have allocated that capital, you're doing harm because there is no historical precedent for the government being smarter than the market, than one individual or a group of central planners being right and the market being wrong, because that's what's happening. We are substituting Donald Trump's judgment for the free market's judgment, right? And that's very suspect. But, even if you believe that Donald Trump is some kind of genius and he's the first guy that can make socialism work, right? He's the one guy that can do it. He's smarter than the markets. Even if you want to, accept that. I mean, I don't believe that, but I'll concede it just for the sake of argument. The precedent is horrible because Donald Trump isn't going to be president forever. What happens if AOC becomes president? And now she decides to do the same thing. Well, if Donald Trump is allowed to pick the companies that the U.S. government should invest in, well, I'm going to do the same thing. So now you want AOC allocating capital in the U.S., deciding, which companies should get funded. The whole principle is horrible. And this is just another bad idea. It's another thing that Ronald Reagan would be opposed to. If all Republicans should be opposing this, not just me, but of course, a lot of them don't have the backbone to stand up to Donald Trump. Another news item I saw today on the crypto market. So JP Morgan, and Jamie Dimon runs JP Morgan, a very staunch crypto critic, right? Pet rock, Ponzi, pretty much says the same things that I do about Bitcoin and crypto. But JP Morgan, apparently, they haven't announced all the details, but they are going to allow their institutional clients to borrow against crypto collateral, Bitcoin and Ether. And of course, the industry, this is great, right? We can use our Bitcoin to go out and borrow money and buy more Bitcoin, right? Or buy more Ether or whatever. Or we can, take money out and just spend it and not have to sell our Bitcoin and pay taxes or whatever. So, the markets look at this, oh, this is good news, right? Because you can now lever up on your Bitcoin. But ultimately, this is going to be bad news because, I don't think Bitcoin or crypto is very good collateral. And I'm sure that when JP Morgan extends credit on Bitcoin and crypto, that they're going to be recourse loans, meaning if you end up getting liquidated because Bitcoin or Ether crash and JP Morgan is not able to get enough money, they're going to come after your other assets. But the problem is maybe their other assets won't be there. I mean, I think there's ultimately going to be a lot of losses because leverage, and we saw how that happened just, like a couple of weeks ago in crypto. But if a lot of people lever up their Bitcoin and then there's a big drop in Bitcoin, which will happen, now margin calls get triggered. And that exacerbates the selling because now you're selling into a weak market that doesn't have a lot of liquidity. So the more leverage that gets introduced into the crypto market, the more downside risk there is in that market. Sure, in the short run, it can help push the market up because you can lever up and buy more crypto, or people who might otherwise be selling their crypto can borrow against it instead and not sell it. So that helps keep the market up. But all of that leverage building up in crypto is ultimately a big negative for crypto and, of course, for the lenders if they end up losing money on their crypto loans because the market crashes, they sell the crypto, and they don't raise enough money. Now, I'm sure they're not going to allow a massive amount of collateral, right? I'm sure they're going to maybe loan out 25% or 30%, right? They're probably not going to give you as much credit against Bitcoin as they would against, a typical stock, right? Because they would recognize greater chance that there could be a big drop and there might not be the liquidity. But they haven't announced the details yet. Oh, by the way, so I did a podcast, a crypto podcast, and I talked about my ultimate intention at Schiff Gold to launch a gold-backed token, right? Tokenized gold. And that is something that I don't have it yet. I mean, it's not being launched yet. It's part of what I'm planning on doing at Schiff Gold. And I'm going to be rolling out the digital gold platform soon. And the token is probably the last piece of that puzzle. So that's not happening this year, maybe next year. But I mean, I'm not in any rush to do it, but it is something that I'm going to do. But I mentioned it on this podcast. And then, of course, CZ over at Binance, who just got pardoned, which I guess a little late because he's already served his time and paid his fine. But I guess psychologically, it's nice to get a pardon and kind of get the criminal record washed away, even if obviously you can't get back the 4 months that you spent in jail. I don't think CZ minds the $50 million fine because that's not a big deal. But I think it's good vindication. I never thought that he should have been sentenced to prison for what was done. I mean, AML violations of the Bank Secrecy Act. I mean, the whole act I think is unconstitutional. The stuff that the government requires, but they were looking for a lot of scapegoats and they were vilifying a lot of people. I got investigated for 2 years for violations of the Bank Secrecy Act. They couldn't find anything on me. They couldn't even indict me, but they still were able to convince Puerto Rican regulators and the media to put the bank out of business anyway. But at least they were able to find some BS evidence in which to indict CZ. And so he's now been, pardoned after the fact. But that may make it easier. In fact, that will probably make it easier for him to do business in the United States. And that's probably, an important factor. But anyway, so CZ, I guess, saw this interview or read about it. And so then he immediately calls me out and says, tokenized gold is no good, right? Because it's like, trust me, bro. Like it's not really, it's not like Bitcoin because you still have to trust a third party, which I thought, was pretty rich coming from ZZ because what do you think Binance is? It's an exchange. You leave your Bitcoin on an exchange. You're trusting that exchange. You've got a third party. But meanwhile, the whole crypto industry is about third parties now. I mean, the big thing is tokenization. It's stable coins. What's a stable coin? You're trusting a third party with your dollars. I mean, I don't even trust my dollars, but now you got to trust a third party to hold your dollars. Well, if you believe in stable coins, well, then how can you trash a gold-backed token? Because it's better, right? What would you rather have? A token backed by dollars where you trust a third party to hold on to your depreciating dollars, or a token backed by gold where you trust a third party to hold on to your gold. I mean, I think the latter is much better. But if you're going to say that the concept of tokenized gold is no good because you have to trust a third party, well, then the whole concept of stablecoins is no good either because it's the same thing. And ETFs, all these people buying Bitcoin ETFs, they're trusting a third party. So if you're going to say that the only good Bitcoin is when there's no third parties and you got to get rid of all these exchanges, you got to get rid of all the ETFs and just have people self-custody in their own wallets and just trade amongst themselves without introducing any of these third parties. But the whole industry has now evolved around third parties. So I thought that his criticism was misplaced. And so I challenged him on X to a debate. And so he has accepted. It's just we don't really know where to do it. My idea was to try to do it on a podcast. I had a lot of big podcasters reached out to me to host it. He's saying that I should come to Blockchain Week in Dubai in early December. That's a big trip. I got to think if I really want to go out there. I mean, I've been there before. I like Dubai. Although it's split up, I think the Blockchain Week is in Abu Dhabi, but then he's got his Binance conference, I think, just before in Dubai. So if I go out there, I'll probably have to stay for the whole thing, and I'll be out there for about a week or so. But final thing I wanted to mention, you know, I've been talking about on this my YouTube channel how I've been trying to get to 600,000 subscribers. And I've been trying to get there for like 2 years. I just below. I'm finally less than 200 away from 600,000 subscribers to this channel, to my main YouTube channel. So if you don't subscribe to the Peter Schiff YouTube channel, then do it, right? And we'll probably get to 400,000. But the reason that it's taken me so long to get to 400,000 is because my channel has been shadow banned for years by YouTube. I never really thought about this until it was pointed out to me. And then I, researched a little bit. And yeah, that's exactly what's happened. And what that means is that YouTube decided, probably during the COVID years, that I was disseminating misinformation. I was one of those purveyors of misinformation, which is generally the truth, but the truth that is at odds with the establishment, right? And of course, a lot of the things that I say are outside the mainstream. And therefore, according to some Bitcoin algorithms, it's disinformation, even though it's the mainstream that's promulgating disinformation. I'm telling the truth. But in a world where the mainstream is misinforming people, the truth tellers are the ones that get labeled the disinformation purveyors. And so that's me. And so what happens is they have throttled back my channel, which means that they don't recommend my videos to people who may have an interest in them based on their preferences. So people are not just finding my videos. When they go to YouTube, they don't see it. The people who watch my YouTube videos are the people who follow me. The people who are subscribing to my channel, they watch them. But a lot of new people that might be interested, if they heard about me, they're not hearing about me because YouTube is deliberately not promoting me the way they would promote other channels that were not labeled disinformation. And the way I can really see that is I started posting videos on the Schiff Gold YouTube channel, which I had never done. I had some other employees that used to work for me, and they were doing this podcast every week, the Schiff Gold Friday Market Wrap. I never did it myself. They did it. And, they got like 1,000 views, every video, right? Not a lot of views. And they had about 15,000 to 20,000 subscribers, right? I started doing the videos, and the view count immediately spiked up. Now, my last video that I did on Friday, right? So a week ago. No, I didn't do it on Friday. I did it on Tuesday, 3 days ago. Tuesday. I did the Friday market wrap on Tuesday because on Friday I was in Orlando, right? I was there. I did the money show, and then I was with my family at theme parks. So I wasn't able to do the video until Tuesday. I would have done it Monday, actually, but our internet went down. So I did it on Tuesday. That video has, last I checked, 109,000 views. 109,000. That's more than my typical podcast video. Now, I know some people listen to my podcast on other platforms. They listen on Shift Radio. They listen on, Apple, iTunes, Stitcher. So a lot more people listen to my podcast than who just watch it on YouTube. But just the YouTube audience, right? Most of my videos, despite the fact that I have almost 600,000 subscribers, I generally get anywhere between, 70 and 100,000. I mean, my last week, the one I did, I got about 130,000. That was a good one. But I typically get less than 100,000 on a random podcast video with almost 600,000 subscribers. Yet the Schiff Gold channel with 34,000 subscribers got almost 110,000 views. How is that? The reason is that channel is not shadow banned. And so when I do a video and I post it to Schiff Gold, YouTube promotes it the way it does all of its other videos. And therefore, I'm getting a much broader reach. I'm getting a lot of people finding out about me. I can only imagine how many more subscribers I would have now and how many more views my typical YouTube video would be getting if for the past 4 or 5 years, I hadn't been shadow banned. If YouTube was actually sharing my content. Because if you look at the people who like and subscribe and comment, I get a lot of interaction. In fact, the interaction that I get on the Schiff Gold videos are pretty much the same as the interaction I get on my main channel. But that's the one that is getting promoted because it hasn't been shadow banned. So what I'm doing going forward, and it's starting tonight, I am putting these Peter Schiff Show podcasts, simulcasting them on both channels. So you can watch the video on my main channel or on the Schiff Gold channel. But the key is a lot of people might now see the video because YouTube will promote the video on the Schiff Gold channel, whereas it won't promote the video on this channel, of course, until eventually they shadow ban that one, right? I don't know how long it's going to take. Maybe they're not doing it anymore because I've read that they're not, once they shadow ban you, they never unshadow ban you. But I don't know that they're as, concerned about it. I think a lot of it started during COVID, and that's when they really got, into the misinformation, vaccine related, even though I never really got into that topic very much. But hopefully my new channel won't get, blacklisted and shadow banned. And hopefully a lot more people will find out about, what I'm saying because they'll learn about it now because they'll see it in their feeds from the Schiff Gold channel. But one thing that you can do to help break through and try to counteract some of the shadow ban is engage. Again, engage with my YouTube videos. So like them, comment on them, even if it's just great video, nice shirt, whatever it is, short and sweet, just any kind of comment. The algorithms don't read the comments. They just count up the number. So a lot of comments is a good thing. A lot of likes is a good thing. It also likes it if you watch till the end, which I guess, it doesn't make sense now if I'm pointing it out at the end. So you guys who are hearing this, you already watched to the end. But in the future, if you get tempted to turn it off before the end, stick it out. Because that's another thing that the algorithms like to show that the videos are engaging and interesting is that people watch them longer. And so I kind of have to make my videos so obviously appealing that maybe they can get recommended or shared even despite the shadow ban. But it should work really well on the Schiff Gold channel. In the meantime, take advantage of this pullback in the price of gold. Gold was as high as almost 4,400. We're now down closer to 4,100. Buy some. Silver, I think now buying it below 50 is a great buy because I don't think it will be below 50 for long. And I do believe that 50 will ultimately be the support, even though we're below 50 now. That was the double top. We've taken it out. We've now pulled back. I think the next move will probably catapult it much higher than 50. So you can still buy silver right now. So go to Shift Gold. Don't just watch the YouTube videos on the Shift Gold YouTube channel. Go to Shift Gold. And more importantly, take advantage of a 15% correction in gold and silver stocks. Gold is looking great with a $4,000 floor. These miners are going to be literally printing money. The reaction to the Newmont news today, I think, is just a buying opportunity in Newmont, in the rest of the sector. You know, when people are afraid and they're, selling their stocks, that's the time to add to your positions, buying more. If you didn't have a big enough position, if you were worried that you missed it, right, you were watching these mining stocks really run and you were regretting the fact that you didn't put more money in, well, don't regret it now. You can put the money in. The market has given you an opportunity. Don't squander it. And by the way, I think one of the best ways to increase your position in the mining sector is through the Euro-Pacific Gold Fund. EPGIX is the no-load symbol for my fund. You can buy it at any discount broker, or of course, you can contact the brokers at Euro Pacific Asset Management. You can also set up a separately managed account and invest in a portfolio of mining stocks that we manage. And I saw my dividend payers fund too. I haven't checked the last few days, but earlier in the week, it was up 52% on the year. Now, it's pulled back as we do have maybe a 15, 20% allocation to gold stocks. So it's probably pulled back below 50%. But, the non-gold stock portfolio has also been doing extremely well as investors are now reallocating capital out of the U.S. market, despite its record highs, into foreign stocks that are performing much better. And again, don't forget, if you're not a subscriber to my newsletter at Schiff Sovereign, make sure and go to that website, schiffsovereign.com, and sign up for the free newsletter. Bye for now.